There are a lot of different ways to trade reversals, but I'm going to show you 3 different strategies that I use today to make over $2,000 across 6 of my evaluations. Now, strategy number 1 is a double entry strategy. The reason we would use this, or where we would use this, is if we're looking to catch the very top or the very bottom of a specific move. Price is running right now. This could be a good idea or option for this specific move. But what you're looking to do is use about half of the capital that you would normally trade with for 2 separate entries. And I will show you an example right after this where I take a trade with 2 entries and it ends up working out really well for me, but I put these safeguards in place for the specific reason that actually made the trade occur in such big profit. But what this looks like in practice is typically, and we'll use this because we don't really have a great example up here just yet, is, let me take the indicator off for just a second, is you have, let's say you're looking to go long off of some of these lows in here. You've got this previous low right here, okay? So we're not really gonna count this one, like price went down here. We're not really gonna take a trade off of that. But let's say we are looking to take a trade somewhere off of the levels that would be here, which are pretty much still right here. Well, if we put our entry down here, we run the risk of not getting in the trade. If we put our entry up here, we run the risk of price running on our entry and we get blown out of the trade. That would be a 10-point run here. So we certainly wouldn't want that either. And 10 points is my stop, but your stop can be larger, so it's a different story. But we would set 2 separate entries for half the capital that we would use to try and capture an entry here. And if price just rocket ships up, then fine, we're looking at half the capital, but we get a great move, fantastic. If price continues to run down and hits our second entry, well, we've got a little bit of protection and we still like a reversal off of this level. We just don't want to put all our capital here because we don't want to miss a trade. And if price does run on us, then it could be a little ugly on us. So we put 2 separate entries there to kind of protect our capital and let price run. So let's go back to this level here and then we'll get to the live example. So the levels are pretty much the exact same at this point. And so let's say we'd want to put our entry, I'll just make up a line here. I probably would have put an entry somewhere down here. Just looking at this would have made me a little scared. So I would have put an entry down here at 409. Looks like that is, yeah, 410. Okay, so I'd put like 2 contracts here. I might put 2 contracts here. If I'm trading micros, I might put 5 and 5 or something like that. So I put 5 here, assuming that this might get hit. So the next candle comes through, price jumps down, hits my entry. Maybe it would have missed it by a tick, I'm not sure, but it would have hit. Let's say it did. And then we would just have half of our capital in this trade. I'd be trailing it, and then this trade would be over. Now, this would be a fantastic move, assuming I caught this entire movement up. That'd have been sweet. But the reason that we want to set this one here is we don't want to put all our capital right here, because then if price runs down, like that could get ugly. And if price is sloping down like this, we could have just a huge drop, which kind of is what this candle was, honestly. This candle was a massive drop. So we don't want that. But we do want to get into the trade because we know price is more than likely not going to go down lower than this. But we don't want to be too aggressive. So let's look at a live example where I catch this exact move. All right, here's strategy 1 in practice. So there are 1, 2, 3, 4 different bounces at this level. So I felt pretty confident that price might hit this thing and run up. But I also had a 3 candle low previous before. And so I had an entry there as well. Now what you saw was me set a stop and then me let that stop go because I thought price might sink down to that previous low or just past it. And then it might bounce. I might get exactly what I thought I was going to get, just not when I thought I was going to get it. And so I let price actually do its dance. It runs down, goes just past the entry that I had, and then whips right back up. We ended up making about 350 bucks on this trade. Now, strategy 2 is actually a momentum strategy. What we're looking to do is catch trades off of a bounce, but continuing in the same direction, maybe more of a trend strategy if you'd call it that. So typically we'd want to catch like a long off of this, just buy right here and let price go, right? Buy right here and let price run back up. That is an effective strategy. However, what we've been seeing is that price, like when it goes down hard. And so trying to find some of these bottoms can be very risky because price could hit your entry and then continue to sink down and it blows up your account or it blows the trade way before it ever reverses. And so what I've found here is that we had price sitting kind of in between our volume gap lines on the downside. And so all I did is instead of using these as support, I use it as resistance, put an entry at this 478 level or so, and then let price hit that and return back. So if we speed it up just 1, price would touch and like touch up here, I believe it was. Maybe it was at the 478 level. I'm not exactly sure. We'll look at the example. Price hits it and then it runs back down. We make $600 on this trade specifically by just catching the right entry, but continuing the downward movement. We've got our EMAs here trending down. Probably don't want to look for a strong buy here because momentum is coming down. So we want to look for ways to sell, and we could sell up here, or if price extends far enough, we can sell while price does a little bit of a rebound and then continues in that direction. So same exact candles, and actually VWAP was at this level as well, so that gave me a little bit more confidence, but we found a volume gap and we essentially just shorted at that level. The big red candle came down, okay, fine, and then we get price to kind of roll back up to a previous candle low. We place our entry right there and price falls back for us, make over $600 on this trade. A really simple and easy trade, but we also let VWAP kind of be an additional resistance point for us, pushing price back down with the trend. Now, strategy 3 is very similar to strategy 2, where we're looking to take trades with the trend, but this one's a little bit different. And unless you have the full V gaps indicator, you're not gonna be able to see this one, but you're gonna have to take my word for it, all right? Which is we had price pull back and we're looking at kind of an EMA bounce here. That's not what we were trading, but there was a nice volume gap that wasn't identified, but I kind of spotted it with my eyes. And for those of you who get the V gaps indicator, I will teach you this strategy because it's really effective, because it does help when price is kind of sitting between two levels heavily. There's some spots in here that you can capitalize on. So what we did here is we went ahead and took a long position off of this candle here, and I'll just show you the next candle so you can see it. But we put our entry somewhere in here, right? This between 495 and like 493, so somewhere in there, those 2 points. Price hits it, and we might have been 1 point off. We had like 1 point of drawdown. Price hit it and launched. And we ended up making just under $800 on this specific candle. But what we're looking to do is continue the upward movement, but find smaller volume gaps that we can kind of correlate with previous resistance or support touches. So kind of here, price dipped here and here. And I kind of felt confident that, okay, even if price did fly down, I'm only looking at about a 5-point drop before price might bounce a continuous movement. So I was pretty aggressive on this one, but this could have been a 2-entry system as well, where we put an entry kind of at that spot, or maybe put our entry like right here-ish, right? Not to be on this candle, but to be somewhere in here. And then we put another entry down here just in case. But price is kind of rebounding off of these lows, moving back up. I see the EMAs. Here we put our entry at a really good spot. We get in the very next candle and price just takes off for us. So let's look at that one now. All right, here's strategy 3 in real time. So we have our entry just below that previous candle low, keeping in mind that there are 2 previous green candles that also had lower wicks. But again, once we got into the trade, maybe 1 point of drawdown and then price rocket ships back up. Now, we have 2 effects going on right here. Number 1 is we have a volume gap, so price is naturally going to bounce at these levels. But we also have a continuation of an upward move shown to you by the EMAs. So EMAs are showing up. I want to take trades in a long direction. I find a volume gap, put my entry at that spot, and boom, make $800 in one trade. Here's our 4th example, and it's actually very similar to the previous one. Still looking to get that upward trend, and I'm putting my entry at the 3 bottom spots that have previously been touched and then bounced off of. In this one, price did give me a little bit of drawdown, but eventually it did snap back up and it ran again. So kind of the same trade twice, but this one gave me a little bit more drawdown, but I had a lot more concrete proof that price probably was going to bounce at that level and then run up. This one ended up making about 680, I think it was, on this trade or so. So super solid trade, but same price action. Red candle, bounce, big green candle. Now, for those of you who are interested in the volume gaps indicator, this is what I'm thinking I want to do with it. We're going to make a small private group. It's not going to be more than like 10 or 15 people. It's going to be very tight. And what we're going to do in there is we're going to talk through all the strategies. I'm going to explain the indicator clearly, make a quick little course on it. And then I'm going to go live daily just for this group, and we will just trade volume gaps. And if you can't make it, that's fine. The recordings will be available. But I'm going to go live just for that specific group so we can all trade the same way. The reason I want to make this a smaller group and I'm making it paid and it's going to be separate is because I want everybody trading one strategy, right? I don't want to mix of like 15 different things. We're trying to explore how to do things. I want one specific strategy on how to use this thing, how to catch reversals, and that's it. So it's going to be a really small group. So if you want to join in, let me know. You can comment below. Make sure you're inside the Discord. Make sure you're on the email list because that's where everything's going to go out. I will announce all the details later today. Today's Wednesday. Thursday as well, enrollment will begin, and then we'll close it down Friday, and then that will be it. And then it'll just be this small group, and then we can open it up later, maybe late July or early August. So we'll look at it that way. So if you want the VGAPS indicator, make sure you're in the Discord. Make sure you're on the email list. Comment below if you're not. I'll help you get in there, and I will see you inside.